Before you jump right in, it is better to not only discover more about investing and how it all works, but likewise to determine what your goals are. Please listen and watch this video guide, and then apply what you learned. Subscribe and like for more educational videos to come. Let us begin. What do you hope to accomplish with your investments? Will you be funding a college education, buying a home, retiring? Before you invest a single penny, truly consider what you hope to accomplish with that investment. Knowing what your goal is will help you arrive at smarter investment decisions along the way. The start point. Too often, individuals invest cash with dreams of becoming rich overnight. This is possible, but it's likewise rare. It's commonly a very bad idea to start investing with hopes of becoming rich overnight. It's safer to invest your cash in such a way that it will grow slowly over time and be used for retirement or a youngster's education. However, when your investment goal is to get rich quick, you should learn as much about high-yield, short-term investing as you possibly may before you invest. You ought to strongly consider talking to a financial planner before making any investments. Your financial planner may help you determine what type of investing you must do to reach the financial goals that you have set. He or she may give you realistic information as to what kind of returns you may expect and how long it will take to reach your particular goals. Essentially, stock is a representation of ownership in a business. Granted, it generally takes a ton of stock, quite literally, in order to have any significant ownership in any given business, but ownership is what it represents. It means that you have a valid interest in the company and a legitimate claim to a portion of the company's holdings or profits. Owning a share of stock makes you a part owner of the business in which you own the stock. Ever wanted to own a Harley? How about owning a share of their stock? It's probably cheaper, and with gasoline prices hitting the roof lately, might make you enough extra money to buy your own Harley to ride, as well as a taste of ownership in the company. Any company that is openly traded on the various stock exchanges can be purchased through stocks. Some cost more per share than others, and some are much more stable than others. It's not really the best plan from a business point of view to purchase stocks simply because you like a company's products, though I would like to think that there is something good about the company and its financial future, if they are putting out products that you believe in. When purchasing stocks for the purpose of profits, you need to see the big picture though, and not simply focus on whether you like the company or their products. This is a financial decision that can bring you big money, some money, or cost you money in the end. If you earn big returns, then it is money well spent. If you lose money, then let's hope that it was a learning experience at the very least. A few things to look at when selecting stocks include the following. History. There is a lot that can be learned from a company's history. Does it treat its employees well? Has it experienced ups and downs along the way and came out smiling? Has it had its shares of upheavals and still managed to come out ahead? You want to invest in a company that has a history of overcoming adversity when possible. Current performance. You don't want to linger in the past, however, as the present can tell a lot about companies too. Owners and founders die only to be replaced by boards who have profit in mind but do very little to instill the same loyalty from buyers that previous owners managed to do. You want to avoid these companies as they could be on their way to a few turbulent times ahead. Forecasts and projections. While these are all very speculative, you can judge how well a company has met these forecasts in the past in order to predict how it will deal with the future this time. If you feel good about the financial future of a company and want to be along for the ride, perhaps the company is worth the risk. There are many reasons to purchase a great stock, but the most important would be a company that produces a product you believe in, that treats its staff well, and provides an excellent working environment for all. It's much easier to expect great things from a company that treats its employees well than one that does not. Why buy stock? The question of the century for many would be, businessmen and women may be, why on earth would anyone buy stocks? Quite frankly, the question should be, why on earth wouldn't they? Owning stock in a company means that you have stock in that company. You have an investment, however meager, in the success and failure of that company, and for this reason you have a little bit of ownership in the company as well. Many people purchase stocks for many different reasons. There are about as many reasons for the purchases as there are people. Some people hope to accumulate a large amount of stock within a company so that they may wield some level of power within that company. This is not always the case, though. In most companies, those that own large quantities of stock do have a bit of a voice when it comes to the decisions being made concerning the future of the company. Companies are responsible to those that hold shares of stock, after all. Others want to own a little piece of a company that produces a product they believe in. I love chocolate. For me, it makes perfect sense to invest money in Hershey stocks. It's a product that I believe has a solid future, an excellent product, and real potential for new products, and an eye on emerging markets. These are things that those purchased stocks should look at before buying stock. At the same time, I realize that Hershey stocks are very established and any earnings on my few stocks are going to be minimal. At the same time, this is a very stable stock that is likely to bring in some money year after year. Not a sprint stock to be sure, but an endurance stock that I get a kick out of including in my portfolio. In other words, some people buy stocks simply because they like the product. Day traders buy and sell stocks like some of Breathe in anticipation of making money and nothing more well for the most part. Some do it for the rush and the thrill of the hunt for those elusive stock market moments of triumph. Of course, most people buy stocks in hopes of ample returns on their investments. Some just expect more immediate returns than others. Day trading is a drive-through type of investing compared to the long lines that people stand in inside waiting for the long-term payoffs that retirements are funded upon. You will find as many reasons for investing as you will find reasons to purchase stock. The questions you should be finding out for yourself is why people buy certain stocks, and that is a question that is going to be individual to each person for each stock they purchase. There are no magic formulas for success, though there are many things you can do to lessen the risks of failure when investing in stocks and bonds. How to diversify your portfolio. I'm sure you've heard how important it is to keep a diverse financial portfolio. There are many reasons for this, not the least of which is spreading out the risks as well as the rewards so that one bad day on the market doesn't do in your entire financial future. Many people have learned along the way that the price to be paid for failing to diversify can be very high indeed. If you aren't prepared to pay that price, then the solution is probably much simpler than you may realize. The first thing you need to realize is that there is no perfect solution that is always guaranteed to be a safe investment. There is no such thing as a risk-free investment, only those that carry less risk than others. With this in mind, you can minimize the risks by spreading them out between several different stocks, bonds, and funds. The first thing you want to do is divide your holdings between several sectors. This means that when one sector performs poorly, you still have the hope that the other sectors won't share the same fate. During the dot-com bust a few years back and the subprime real estate bust more recently, many people learned the hardships that can come about by having too much invested in one industry. Had they spread their investments around a little better, many people would not have been hit nearly as hard as they were. Once you've done that, you will want to purchase a few stocks, some mutual funds. These are much lower risk funds that are designed to steadily but slowly build value over time, and a few CDs to balance things out. There are all kinds of formulas as to how to do this for maximum effect, but the truth of the matter is that you can't really determine the best route for you to take without knowing a little more about your current situation and your goals and plans. This is why a financial advisor is so important. Different concentrations of stocks, bonds, and funds are preferable at different stages in your life and according to the amount of money you currently have set aside. Ultimately, in diversifying, you want to avoid having too great of a concentration in one stock, one sector, and one investment type whenever possible. You never want to rest your entire financial future in one stock, bond, or fund, because that really is an all-or-nothing risk and rarely turns out good. If you get nothing else from a financial planner, you really should consult with one about how to best diversify your investment portfolio. He or she can help you get started along the path to financially planning a brighter future than you may have ever imagined for your family. Finally, if you want your retirement to be a nice, comfortable existence, you need to be ready today to begin investing in your future retirement. Time is short, life expectancies are longer than ever, and the costs of living are continuing to rise at alarming rates. Investing in your financial future is the greatest gift you can give yourself by far. We hope and wish this video guide has been of a great benefit and value. So, until next video guide, thanks for listening and watching Online Digital Bookstore.